Hi there everyone. Okay, we're up to video number 32 now. For module 2 it's video number 16. And in this video we're going to talk about the money flow index. Alright, so let's go back to our navigator panel and find the money flow index right there. Alright, left click, drag and drop. And this is going to be dodgy blue, so let's go ahead and set that to black. The line can be just as is. I've got some visual levels here which are set to 20 and 80 by default. I'm going to set this to a color of red, which is right there. You can do the same, and then we'll just go ahead and click on OK. Now this particular indicator is similar to the CCI and the RSI, which basically measures overbought and oversold levels. It also dictates where the trade will go as well. It lets you know what direction the trend is going in. Okay. Um, Now again, just focusing on patterns that emerge here, you'll start to get better at the forex once you start seeing the patterns emerge as soon as you apply the indicator to the chart. And the kind of patterns you need to be looking at are mirror images of this indicator with the currency pairs, and you can see this line comes down and this comes down as well, and you've got this dotted dashed line in there as well, which is those levels that we were just looking at. We're at 20 and 80, and you can see when it breaks the 80 the market starts to drop. Alright, and you can see here where the market broke the 20, just briefly the market went up. Alright, here we can see when it just broke 80 there, the market dropped a little bit. Alright, we can see it's broke here and the market dropped a little bit more, and then it continued to break and fall lower. And here you can see a buy signal as well, where it breaks the 20, goes up higher, and then the market proceeds to go up higher. But you can see there are a lot of sporadic results happening where the money flow index line here doesn't always reach from the bottom part here on the 20 to all the way to the top part in one successful session. It takes numerous attempts to try and get to the top, and then numerous attempts to try and get down to the bottom again. And this can cause you to have some bad trades along the lines. So I try to again is think outside the box and find triggers. Alright, triggers for me to go in and actually take the trade on. Alright, so what I tend to do is I'll put in some more levels. Well, actually I can take that out. Let's just delete that. What I can do is right click on the indicator, go to the MFI properties, and I can go in and put in some other levels if I want to. Alright, so let's go ahead and add a 55 level, and then let's go ahead and click another one and choose that, and choose 45. Oops, 45, and then click on OK. Okay, so when we've got these levels in there, 45 and 55, we will actually use these as buy and sell triggers. When it reaches 55, we go long. When it reaches 45, we go short. So here we can see that the market's gone up, it's come back down. We ignore this first trigger. This is basically can let us know to get prepared for a short trade. And then as it comes down, comes into the 55, starts coming down lower into the 45, then it breaks the 45. At that point where it breaks the 45 is right about there, so we'll be somewhere up here, and then it comes down a little bit lower, and then when it gets to around about here will be your trigger to exit out of that trade. So our exit would be about there, and we would get out there. So our pip gain would be okay, where would we be getting out? I'm not sure, I can't really see that line. Let's just move that. Okay, so it's at the top. Alright, so we would have got in around about there. Let's just take a look at that one, see where we would have got in, and it's on that bar there. Okay, so that's for 141 pips. Okay, and that's off the 4-hour time frame. All right, so we've had our entry, which was right here at that point, so let's move that over to our entry point. And then we've got our exit when the MFI line comes under the 20 and then comes back up above, and that's where we go. That's where we close our trade. All right, so then we see these lines here, and as we go through, take a look. We've got 45, then 55. 55 is to go long, so we would go long right there, and then we would exit the trade. Oh, now this is going to be a difficult one. You can see now that we don't have a point of reference to really close out our long trade because it didn't reach all the way up here. Alright, so we're going to need to really think outside the box again. And to do that, we would need to target previous highs or lows. So let's go ahead and put a line tool in there just to let us know where the buy opportunity appeared, and let's just zoom in. Now the buy opportunity appeared right here. Okay, so we got to say to ourselves, where is the next resistance level? And we got this trend line tool here sitting at 137.89.6 will be our resistance level. So again, remembering what I said before, if we take a buy opportunity, is it really sitting on a support level? And if it's not sitting on a support level, where is it sitting? And if it's sitting inside like say the middle of a support and resistance, that's okay. But if it's sitting pretty close to the resistance level, you don't want to buy there because the chances are that the market might reverse. Alright, so we go ahead and take a look. Okay, well here's the next resistance level. So when we take this trade on, we calculate from there to there, and we say it's 215 pips or so. And then you might say to yourself, okay, is this the kind of pips that I would like to make? And if it is, go for that trade. But when it's like 50 pips away, you don't really want to go for it. Okay, you might be right some of the time, you might be wrong some of the time, but I would rather be more certain than I am not being certain. So I would rather go for the larger pip gains and wait for the 2, 3, 4, 5 days or whichever to actually accumulate those gains. And you can see it does get hit. Alright, now I mean, when I'm doing all this in like still time right now, well, it's in real time, the market's actually moving, but I don't really have any live trades on to show you from that signal that it was developed. But when we get into later into the modules, I will go over some of these videos. In this is just an overview, alright, this particular module of these indicators and giving you an overview of the brief buy and sell signals. But when we get into the next module, I will go over these signals in great detail. Okay, so hopefully this will help make the penny drop, this first section. Alright, so yeah, and you will see that these will come true more often than not. Alright, this is take a look at another area. Here we can see there's a buy signal right here. Okay, so let's take a look. Here's a buy signal. Let's look to our immediate left to see how far away the next resistance will be. It could be a minor resistance, it could be a major resistance. Either way, we need to take them into account. Okay, so here is our buy. We get a buy here, and we just quickly look over here. 100 pips, that's not bad. I don't mind targeting 100 pips off a 4-hour time frame. That's pretty cool. When it reaches there, I would then consider to move my stop loss to break even, or maybe just book in 10-20 pips or something, so at least I get something out for my work. Okay, 10 pips I'll be happy with if I'm doing it at $10 a pip. Especially with a $100,000 balance. But even if you had $10,000 and you only did it at $1 per pip and you only made 10 pips, if the market did come back and reverse, that's fine. Don't worry about it. 10 pips is 10 pips. Okay, so I'm going to look at that and go, okay, that's fine. And then I'll look at the next one, and that's 246. So that could be my main ultimate target, is around about 250 pips. Okay, and then as it starts to move up higher, I'll move my stop loss up higher, so I'm riding, free risk. Alright, so but we can see, we can see where the market did break, and it did go up to the 80 line. That's great for you because you can now relax it a little bit. You don't have to really rely on previous highs or previous lows, depending on the direction that you're going in. You can now rely on this MFI, and when the MFI comes back down, you can close out that trade. and look what's happened. From here to this point, it did actually, you know, hit our target of 250 pips that we was looking at when we did our or our post analysis, pre-analysis. All right, so, and after our analysis, it's come through and it's basically hit. Let's just find another one. Let's find another buy signal. Here is a buy signal right here. Now the market doesn't actually go up as high as 80, so now we're going to have to use a little bit of common sense. Alright, and we're going to have to start targeting areas of its previous highs. Now when we've got to take a look, it happens right here, and it's this particular bar that it happens on. Alright, now if you get in at the bottom of the bar, you'll probably be okay. Alright, because you can see there's two instances here where the market did actually reach that high, so that would be a good target to go for. But if this bar had already been completed, or you'd prefer to wait when a signal appears, which is normally always a good thing, is to wait for a confirmation. But you might want to be a little bit aggressive and get in there and quickly get out again. Well, either which you would need to practice and find your own style. Alright, but here is your buyer, and if you've got it in on the next bar, it's not going to do you no favors. So now you need to switch your mindset and say, no, I'm not going to take this trade, I will wait for another opportunity. Alright, so we're now going to wait for an opportunity, and we can see that this black line is hitting to the 55, now the 45, and the 45 is an indication to go short. Alright, here is our short area right here. Now, do we want to take this particular short? Well, no. Why not? Because we are right on a support line again. Here is our support line. It's been confirmed over here on the left, it's been confirmed here in the middle. It was also kind of confirmed where these two candles did get rejected until the next lot of candles kind of went sideways. So there's evidence there to not go short on that indication right there. We don't go short on support levels, we only go long on support levels. Alright, it's the key. Here is another area in the market. Here we've got a short right there, and that happens on this candle, and here is a short on well, actually it's just below the support line, so that's good. So it's now a resistance line now, because the currency price fell underneath that line, so that's now a resistance, and we always want to sell at a resistance level and target the next support. And here is your next support here. Now you could have chose this section down the bottom as your support level, but as I mentioned in a few videos back, that I like to account for human error. Okay, so I like to at least come back in on myself a little bit to find a more truer mean average. I try to find the bodies, not the top and bottoms of the wicks. I try to find a mean average of the bodies, and I'm going to say, okay, I'm going to put it around about here. Alright, if there's more substance to work with, more area to work with, then I'm going to rather use where there's more instances of that medium move average than there are a couple. Like for instance, here is two candles, and I look for some other candles to its left or its right to see if it fits within that medium mean average to put my support line on. It doesn't, so I keep on moving up until I hit more of these candles, and I keep going up, and there I basically hit quite a few of them in session from here to there. So I want to put my support line around about here, and that would be my take profit target. So it would be from here down to there for 73 pips. Alright, let's take a look at another one. Here is a buy trade. We can take the buy trade right here because we're sitting on support, so that's good. We can take buy trades on support lines, and as the market goes up, it exits around about here. Now, you got to also use common sense. Don't just rely on the raw. Sometimes you need to be there and close a trade. But if you're not there to close a trade, then go ahead and put in a take profit target and apply it to the rule of the next previous high or the next one higher if you're going in for a long trade. So here we are. This is where we would basically go long. Take a look over here. That's 79 pips. The next one is 229. Alright, maybe we can take a look at some other areas where there's some mean average. So one there, and there's one there, and a bit of congestion there, so you can turn around and maybe target 120 pips, and it does get hit. These are the kind of thought processes that your mind should go through before opening up the trade and working out where your take profits are going to be. And also conversely, where would you put your stop loss? Well, again, if I'm looking at the charts, I will keep my stop loss open because I don't really want my broker knowing where my stop losses are. All right. But for an imaginary stop loss, an invisible stop loss, I would go ahead and then maybe go ahead and put in a horizontal line tool in, and then I could leave that there and give myself a note possibly, and then give it a name, or give it a label first. And I'm just going to put SL in there. Okay, I'll just change that to black, just to remind myself that that's the stop loss level. So when the market does reach that level, I can close a trade out. Alright, so the broker doesn't know. Alright, so there you have it. Okay, so play around with this one for about 2 to 3 days. Okay, if you have any questions, feel free to ask. Alright, and until then, I will see you in the next video. Alright, bye for now.